Hi, this is Linda Welsh from Linda Welsh Realty Group at Compass. Thank you for joining me today. I want to talk to a lot of you first-time home buyers or people who've not been in the market for a while. If you're thinking that 2026 is your year to purchase a home, and for a lot of people it is on their radar because of falling interest rates, maybe new jobs, a change in their living condition, or a bigger or smaller family. So these are some of the things that you can do to get ready, and you really need to start now. You know, the new year is only 2 months away, and November is a critical time to start putting your ducks in order. Number one is to review your credit and clean up any issues. I know I've been working on that myself, and today, in fact, set a new plateau and goal to get to. I'm excited about that. It gives me a lot of reassurance that we're on the right track and that we're watching how things are going. So pull your credit report, if possible, from all three sources. Don't be afraid of the impact to your credit score, because number one, even if you were to make a purchase or something of that sort, and hopefully you won't make a large purchase between now and purchasing a home. In other words, don't go out and buy a brand new car, because that's probably not a great idea for your debt to income ratio. But if you pull all your credit reports, you'll get a good synopsis of what it's going to look like, keeping in mind that a lender has a slightly different credit score that they use. So don't be shocked if they tell you your credit score is such and such, because they use a different source. Dispute any errors that you find on there. At the end of your credit report, there should be a list of how to contact each of the lenders that you have credit with. And so if there are any problems there, then go in and request them to review your file and see if you can get anything that's a problem cleaned off. And by the way, a lot of times there are things on your credit report that you may not have even known were there. There might be some old medical bills. There might be other old credit cards or whatever that maybe you paid off a long time ago and it just didn't fall off. Pay down your balances, keeping in mind that keeping your credit usage below 30% is really ideal. Ideally, you'll pay it off every month in full, because then you're not going to have those interest fees, etc. But it is good to establish some credit. If you don't have credit there and you're afraid that you're going to have difficulty getting credit, there are some high interest rate credit cards that I'd be happy to tell you about that will help you establish that credit. And if you pay them off every month, then it's not going to really hurt your budget, because you're not going to have those interest fees, correct? Avoid opening any new accounts if possible. Don't reply to those shiny objects when you're on an airplane and they say, hey, if you give us the right to use a new credit card, then we are going to give you so many points and bonuses and all this. You know, you're paying for it in the end. It's you're paying for that opportunity. So try not to open any credit accounts. And if possible, what I've been doing, and maybe you'll consider doing this too, when you can, make double payments per month. You'll find that your credit's paid off quicker, like with car loans, where I'm making 2 payments a month for each of our cars. One of them will be paid off this month, and the other one hopefully within 2026. So I think it's a really good idea. And in fact, sometimes it can help your interest if you're on daily interest on a credit card, to actually pay smaller amounts a couple times a month rather than paying one amount at the end of the month. Because if they're only charging you on a per diem or a per day, then you're going to end up paying less for those fees. Number 2, organize your budget and your savings. So look at your income, look at your debts, and look at your expenses. So you might be kind of shocked to find out what you're spending money on. Those small things really do add up. And pay attention to your grocery bill. Pay attention to your budget for those things, for eating out, etc. We find that we're eating less the older we get. So we actually, every time we go out, it's usually 2 or 3 meals for us. And that works out great. Use a mortgage calculator to understand what your costs will be when you are ready to purchase. And if you are going to be talking to a lender, which you should, to get prepared for next year, they can help highlight some of the expenses that you're going to have when you purchase a home. Keep in mind that there will be taxes, there may be HOA fees, and there will be an insurance premium. So depending on where you purchase your home, there can be a significant difference in your tax rates. Here in Austin, we're seeing that tax rates can be as low as 1.5 and as high as well over 3% per $100 valuation or assessment. So there are some big differences there, keeping in mind that a 1.5% tax rate on a home that is $3 million in an area where there's frequently $3 million homes is going to be a lot higher than a 3% rate in an area where you've got a $400,000 home. So ideally, look at both the price of the home, the assessed values on average, and also on your tax rate. And we can help you with that. Another consideration for people is where they want to live. Think about whether or not schools are important to you. And for a lot of people, schools are important because they have kids, but for a lot of others, even if they don't have kids, if this is not your forever home, if this is the home you're going to be in for 3 or 5 years, it's also going to be an indicator of where a lot of other people are going to be interested in purchasing, especially if it's a home that has 4 or more bedrooms, because chances are the people who live in the home have families because they need 4 bedrooms, they need 5 bedrooms. And so having it in a decent school district is really, really important. And by the way, we can get the rankings on the school districts for you when you're ready to purchase or ready to just even consider properties, where you're going to work, if you're going to commute, how long you have to commute to that office and or the airport, because a lot of people are traveling, how far to the nearest hospital. For a lot of older folks, they're concerned about how far is it going to be to my doctor, or how far is it going to be to a hospital if I were to have a problem. For young families, they're concerned about having everything from shopping to food to dance classes and after school daycare and things of that sort. Is set aside savings for your down payment. Now, you're going to need down payment, closing costs, and probably a move-in cushion. Think about the moving costs. Think about whether or not you're going to have to do some things wherever you're living right now, whether it's that you're in an apartment, you're going to have to get things cleaned professionally, whether or not you have to hire for storage, for a moving crew, for a moving truck, and there you may need to buy appliances. If you're going to purchase a new home, please, please, please check with us, because there are lots of considerations with new homes, and we can talk about that in another video. There are always going to be costs on probably every new purchase that you may not have considered. For a new home, the prices that you see advertised are usually the base price, and there's usually no homes that are right at the base price. You can count on $30,000 to $60,000 in upgrades. Some of that can be financed, but for some of the upgrades that you do, most builders are going to require you to maybe pay for half of that up front. Just depends on the builder, and it depends on what the upgrades are and how marketable those things are. If for any reason you can't close on that property, because if you can't close, they have to sell that house to someone else. Number 3, get pre-approved and understand your loan options. So if you're a veteran, you probably are well aware that there are VA loan options that can help you to get even 100% loan. This sounds like a great advantage. It can backfire though. We know some people in the past who have contacted us to sell their homes and bought at the height of the market at 100% loan, and now it's not worth that. So be really, really cautious about your expenditures, and if possible, even if you have that opportunity to have a very low down payment, try to get some savings lined up so that you can start out on a good footing and be able to stay in your home for a long time. And especially give yourself a cushion if something happens and you can't work for a while, etc. Once your credit and savings are in good shape, talk to the lender about getting pre-approved. It's not a bad idea to go ahead and do that now, even if you're not going to be purchasing until 2026, so that you can just get a good idea of what price range that the lender feels comfortable that you should be in. And then, of course, you may decide to look in that price range. You may also decide, I want to look a little bit higher because I really think that we can negotiate on some properties. Or you may want to look a little bit lower because you're very conservative and you want to make sure that you feel comfortable with your payments. The letter that the lender will give you to share when you are going to make an offer on a property is going to be one that says this is the amount that the lender is comfortable on you purchasing up to, and this is the loan amount that they're comfortable giving you. Typically, that's going to be an 80-20, 80% loan, 20% down payment, but not always. We see 90-10-10 loans. We see FHA loans with 3.5% down. We see VA loans with 100% loans. So we've seen it all, and we've been in the business for 28 years. So we've been through all kinds of markets. We're optimistic that 2026 is going to be a very active year. So be prepared. You may be competing for properties in 2026 with many other buyers. So looking good on paper and having everything in order when you're ready to make an offer and go look at homes is really, really important. Okay, so in essence, get pre-approved, start that process now. Find out what your options are in terms of what you should try to get ready for in terms of down payment, in terms of getting your credit in order. And then don't make any major financial purchases. You don't want to rock the boat. You don't want to have a higher debt to income ratio than you need. And don't rely solely on that pre-approval amount, because things can change. And we want to make sure that you are well prepared for the coming year. If you have any questions about any of this, or you would like to attend a buyer seminar, a Zoom call, please reply to this video and we'll give you a schedule of when our next events are going to be. Again, this is Linda Welsh of Linda Welsh Realty Group at Compass, and I'm delighted to help you get ready for your next home purchase.